A lot to talk about in the market. Microsoft does not want to come back to earth. The NASDAQ is at a major trendline level of resistance. The SPY closed above a major trendline level of resistance. We closed our calls over here at 100%, thinking, oh, you know, this is a great opportunity to take some profit, man. Boy, was I wrong. In today's video, we're going to take a look at everything that needs to be taken a look at. We're going to take a look at the large tech stocks. We're going to take a look at the SP500, the NASDAQ, the Russell, the dollar, the bonds, the VIX, all that good stuff. Without further ado, let's get started with the video. I don't know why you don't listen to me. Maybe if I talk in different accent, you listen to me better. But time and time again, I keep telling you. When we have a huge move to the downside, you cannot start going short. You have to go long when we're at a level of support. We've had a huge move to the downside. You have to start looking for longs. The people that would have made a crap ton of money in the past 2 weeks, even if you were trying to scale in as we fell, that is still the most intelligent trade to take. Stop trying to go against oh my god, wow, the market is gonna fall. We're gonna hit 395 or stop thinking like you're an investor when you're trying to trade the market day to day. If you're an investor, stop looking at the charts. But if you're trying to make money consistently swinging day to day, you have to look at the charts. You have to look at the best possible risk reward opportunity given to you at that specific day. If you continue to try to get played by the market and make the same mistakes over and over again, going short at levels of support, you're going to keep on losing all your money. So let's talk about this. Okay. So number one, let's go ahead and look at what the next steps are. Okay. I don't want to rub salt into people's wounds, but let's go ahead. First off, let's start talking about the dollar. Okay. So the dollar is relevant because it has an inverse relationship to the market. Okay. So if the dollar is rising, then that's generally very bad for the overall market. So clearly we saw a huge red day in the dollar. Right now, what we see is the dollar is overextended to the downside in terms of the Bollinger Band. So what you want to look for on Monday is if the dollar opens outside of the lower level of the Bollinger Band, that shows extreme overextension to the downside. And if that occurs, there is a good likelihood, and it's the most intelligent trade to take, is to take profits on your longs and to start scaling into a little bit of shorts. Very lightly, you have to start scaling into shorts because the dollar is very, very overextended to the downside if it opens outside the lower Bollinger Bands. The Bollinger Bands show the standard deviation away from the 20 exponential moving average, which is this orange line. Okay. So if we're trading too far outside either the lower or the upper, it has to reverse. So since the dollar is this far to the lower level, we just figured out that if the dollar has to bounce, then that means that the market has to fall. Okay. That's generally the relationship that's going to happen. So keep that in mind for Monday. Take that into consideration heading into Monday. All right. Next, let's take a look at the VIX. All right, the VIX. I just want to just appreciate how much we god damn, we fell 30 freaking percent in 1, 2, 3, 4, 5 gosh darn trading days. This is ridiculous to me. I don't mind it. I don't mind it, but that's crazy to me. Anyway, the next steps for so the VIX, also similar to the dollar, has an inverse relationship to the market. If the VIX is falling, then the overall market should be rising. That's exactly what we saw the past few days. But the thing with the VIX is that it is not overextended anywhere. The VIX can continue to fall without being overextended algorithmically because the lower level of the Bollinger Band is pointed straight down. So we could continue to have monstrous red candles on the VIX before we even get overextended to the downside. So, yeah, like this has a lot more room to go. But the dollar is the one thing that shows a lot of potential for some weakness in the market. But the VIX, not showing any of that at all. Next, let's take a look at the bonds. Okay, so the bonds are interesting because they have a more correlated relationship to the market. oftentimes, right? So we see a big bounce in the bonds. So if the bonds are doing well, generally the overall market is also supposed to be doing well. So we could see that the bonds are starting to get a bit overextended to the upside. So we know that when things are getting a little overextended to the upside, there should be a bit of a pullback. But as we can see, the upper level of the Bollinger Bands of the bonds pointed upwards. You can see this blue line is pointed upwards. So we can have another move to the upside Monday, easily just continue to move upwards without being algorithmically overextended. So the bonds still showing potential room to the upside. The VIX still showing potential room to the downside. The dollar still the shakiest indicator in terms of bullish momentum, in my opinion. Okay, next, let's take a look at the yields, the 10-year yields. So the 10-year yield is important because it has an inverse relationship to the market, similar to the VIX and the dollar. Okay, the 10-year yield, as we are rising in the yields, the market should be falling. Okay, so similar to where we kind of are on the dollar, right? The yields, 10-year yields here, it started to trade outside of the lower bands, but we bounced. So you could see that the lower bands are pointed lower. This is clearly showing that there's still a little bit more room to the downside. The yields can have another vomit to the downside, and we still might be trading within the bands based on how sharp the Bollinger Bands are going to be falling, right? So the yields can continue to get slapped. The dollar maybe get a little bit of a slap, but the VIX can 100% absolutely have another move to the downside and get clapped. So those are the major non-stock related indicators that we like to look at here. Next, let's take a look at the large tech stocks so we can get some more context to what's going on with the indices before we look at the indices. All right, so what I first want to look at is Apple. So Apple, we had a big green candle into a level of resistance. So if you know me, that's generally not the best time to go long, in my opinion. I don't like going long, especially into with a big green candle like this into a level of resistance. It's a good sign that we held 175. 100%, it's a good sign that Apple held 175, but Apple is at a major level of resistance on Apple. Okay, technically, Apple is at a level of resistance, not the most bullish setup, in my opinion, on Apple. Okay, Microsoft is I guess Microsoft is trying to be like SpaceX. It wants to go into space, doesn't want to come back, and if it does come back, they could just rerun it back with the same material without having to buy new equipment. Corny, but yeah, anyway, this is very algorithmically overextended, and you can clearly see we had 2 days where we completely opened and closed outside of the upper level of the Bollinger Band. So this is a teaching moment here. When we are outside of the upper level of the Bollinger Band, it is harder for the especially on large tech stocks, especially on the indices. This applies. Okay, when we are at the upper level of the Bollinger Band, to revert back inside is fighting against hundreds of billions of dollars of institutional money. Okay, so it's harder to short the upper level of the Bollinger Band on these things. But if we are trading outside of the lower level of the Bollinger Band, it's much easier to trade because it is a lack of institutional buyers, and all it takes is some institutional buyers to step in and push the market up. Whereas if you're trying to short against this strength here, you're fighting against that institutional wave momentum of buying pressure. That's not where you want to be. Okay, but in general, this is absolutely 100 positively percent not where you want to start being a buyer on Microsoft. For that reason, I'm out. I'm just kidding, but for that reason, I am not bullish here, and we should get a bit of a pullback, give bears bears would want an opportunity to go long. Bulls should take this opportunity to take profit, in my opinion. That's the best course of action, in my opinion, on the market. Netflix is honestly it's doing well. Okay, Meta, it is, you know, looks almost identical to Apple. It's still holding above 308, which is good. And but you know, we have this really disgusting setup here with resistance at 318, and this is not a bullish setup on Meta either. Take a look at Amazon. Amazon is doing really well because this huge bounce in IWM as well. So Amazon just kept holding up, and it continued to do well. And you could see, according to the Bollinger Bands here on Amazon, we are still pointed upwards. We can still continue to go up higher. You can see how sharp the Bollinger Bands is on Amazon here. We can still have a huge green candle and probably still close within the Bollinger Bands, to be honest. But if we end up, so this is, this is another teaching moment. If we have a big green candle, right? Let's just, okay, what I want to do, just compare this to this, okay? So if on Monday we have a big green candle and close outside of the upper level of the Bollinger Bands, Tuesday, if we open outside of the upper bands, that would be bearish. We should end up pulling back a bit, okay? But the difference here, the difference in this situation, this scenario here, is that the Bollinger Bands are pointed up very sharply. So even if we, so comparing it to this situation, if we closed outside of the upper bands, Tuesday, like the equivalent of next week, Tuesday over here, we could still open within the Bollinger Bands, meaning we would not be overextended to the upside. So this has a lot more room to go to the upside, but you know, just you can't be long. It's just against my core belief of trying to, you know, be bullish at extremities. Yeah, so you can't be bullish at extremities, you can't be bearish at extremities, and that is my philosophy of life. Okay, so that's my thought on Amazon. Google doing its best to try to break above the 130 and just trying to hold above this gap. It's trying to do its best. A lot of love is going into Nvidia, and so you could see Nvidia is coming close to this trend line level. Okay, so this important trend line that we were monitoring before, you know, multiple levels of support, etc., and you know, it held over here. So back in September, Nvidia and AMD were the main reasons why we had that bounce initially, right? So now we're getting close to that level again. So on Monday, this level of resistance on Nvidia is going to be 458, the trend line level of resistance. So Nvidia almost very close to a level of resistance. AMD, monstrous move to the upside on AMD, man. This is another huge mover, up almost 21% in the past few days. And would you like to start going long on AMD over here, or would you like to get slapped by the market with a huge move to the downside? Because this is another going, look guys, here's my thought process. Going long and opening new longs on huge green candles on AMD, on Microsoft, is the equivalent of going short down here. Are you going to go short down there? Some people might, but it's not the best trading decision. And going long up here, some people might, but it's not the best trading decision. Okay, so the chips are doing well. Google isn't doing as well because a lot of the money is funneling into these other stocks. And let's take a look at Tesla. So Tesla, very similar to Google. So yeah, I would think that once the money starts, you know, funneling back out of the winners, they're going to start flowing back into Tesla, Amazon. They're going to start flowing back into Tesla, Google, and a bit of Apple, in my opinion. So keep your eyes on those. And yeah, that's just be really, really careful. Okay, just be really, really careful about being extremely bullish at extremities. Okay, next, let's just go ahead and take a look at the overall market, starting with the IWM. All right, so the IWM has been the biggest winner over the past few days, up almost 8%, and just gap up after gap up after gap up. So many people were bearish on the IWM, and a lot of it had to do with a lot of IWM related stocks were having earnings this week. And as we know, with earnings, there are earnings run-ups, and a lot of these companies ended up doing pretty well, and they just helped propel money into the IWM, and the IWM was just getting beaten down so much. The sentiment on the IWM was like people were judging the entire market fall. People were judging the SPY falling below 400 based off of the fact that the IWM was so weak. All it took was the IWM to bounce just a little bit, just like this, for people to lose a lot of money going short on the SPY and on the NASDAQ and just on the market in general. So, that's why it really always just pays to just go long at levels of support with stop losses. You absolutely cannot go short when we have extreme weakness already, guys. This is a much better area to go short. Wouldn't you, just thinking in hindsight, right? If you had patience, wouldn't this be a better opportunity to go short? Absolutely. Down here, where is your risk reward? Where is your mind at? Where would you think that we're going short? Use your brain, guys. Use your brain. Come on, guys. Come on. Don't be liquidity for the market makers. They just come on. All right. So the IWM clearly coming to this very important zone here and wicked. You could see this upper wick here. It's trying its best to rise, but it fell. So this wick, right at a major level zone of resistance here, 175 to 176.50, that has to be taken out for us to continue up. So we're at a major level of resistance on the IWM. Keep that in mind. Next, the NASDAQ. We're at a major level of resistance on the NASDAQ. Okay. The trend line level for Monday is going to be at around 369.20, 369.30. So this is clearly the same concept as the IWM. We wicked at a level of resistance. Now we could end up having another green move, but the intelligent trade is not to open up new longs here. Yeah, absolutely, we can have another monstrous bullish day. 100%. But is that the most appropriate trade to take? No. So just understand that. But the thing is that it would be the perfect opportunity for a monstrous move to the upside, because it just would not be intelligent to go long. It wouldn't be intelligent to go long, and enough people would be sidelined. So I wouldn't be surprised. Honestly, I would not be surprised if Monday comes around. If, Sunday futures open, we're up 1%. I wouldn't be surprised at all. 0.5, 1%. Not surprised at all, to be honest, because a lot of people are going to be sidelined. But regardless, you have to take the most intelligent trade. You can't expect the market to make extreme moves. You have to trade the most intelligent way. We're at a level of resistance here on the NASDAQ. The dollar is very overextended to the downside. The IWM had a wick at a level of resistance. And then last but not least, the SPY. Yes, we closed above this major trend line level of resistance. We can see that the SPY is doing better than the NASDAQ, primarily because the IWM, right? So this trend line level of support for Monday is going to be around 433.50. Okay, so we need to hold above 433.50 if we want to continue being bullish and hold above this trend line. The major level of resistance. We are back at this 437 level of resistance, which is absolutely insane. Yeah, that's crazy. What a monstrous move. What a very, very monstrous move. I cannot wait to trade again and live stream Monday, and I cannot wait. Because I'm assuming the market is going to be it needs to find it's going to need to find direction now. So after a huge move to the upside, especially heading into a level of resistance, with Microsoft at a level of resistance, or with Microsoft, you know, with Elon Musk out there in space, with the IWM, the NASDAQ, and the SPY all painting these types of candles at levels of resistance, with the dollar overextended like this to the downside, it becomes really, really difficult, in my opinion, to be exceedingly bullish. So yeah, just remember, guys, these extremes, they don't come often, but don't fumble them. Do not mess up the opportunity that we have. Okay, like, I understand when things look extremely weak, it is the best it feels right to be bearish, but it's not the right decision in terms of trading. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early Monday morning for live streaming. All right, take care. Have a good one.